This is going to be a nice short live that I do randomly throughout the day. The goal is to keep it short, so I have a timer here. Not sure how long it times, but we're going to find out today. If you want a long live stream, I do my live streams Tuesday afternoons at 4 p.m. Pacific, where I pretty much answer every question that comes in. The goal today is to be 15 minutes or less and answer the questions that come in the chat. So while I explain a little bit about who I am for the people who are watching this in Futureland, think of the questions that you want that will help you reach financial freedom, and look for my random midday live streams. There are really three ways to reach financial freedom, three main paths. There's probably other paths, but these are the three that most people focus on. The first is to invest in the stock market. And that's the one that most people do, whether they know it or not, because investing in a retirement account generally puts your money into stocks and bonds. The second way that a lot of people want to do, because they think of themselves as entrepreneurs, is to start and grow a business with the intent of growing it to the point where it's large enough for somebody else to run the day-to-day, so you could step back and be financially free. And the third way is the way that I chose. It was investing in real estate. But if you break down each one of those, there are thousands of strategies for each one of those three paths. In real estate, I chose buy and hold rentals. So I'm not a flipper. I don't do BRRRRs. I'm not a wholesaler. I chose residential, 4 units or less, because I like 30-year fixed rate debt. I've house hacked twice. The rest of my purchases were done as investments. House hacking is, in my opinion, the cheat code to wealth and one of the easiest ways to make work optional, because it reduces your expenses, allowing you to save to invest sooner. Howdy, All-Nighter and Kip. How are you guys? So what I'm doing is sharing how I reached financial freedom in 10 years or less, even though I wasn't starting in a good position. House hacking helped, but it's not a requirement. For most people, real estate might not be the answer. Owning a property and dealing with tenants, some people are either too nice or not organized enough. So hiring a property manager might be the only option that people have if they don't have what it takes to actually manage the property themselves. But I hear a lot of people talk about all of the reasons why they wouldn't want to own real estate. And if you can think of reasons, and if your goal is to find reasons why you wouldn't want to, it's probably not for you. Because a lot of the times content here on YouTube in YouTube University points out the good stuff. The Deal Deep Delves talk about the properties that worked, the cash on cash return, the amazing deal you found, how you found the property, how you funded the property. It doesn't deal with the doubt, the lack of self-confidence, the confusion that happens when we try to do something new that we don't understand, because almost every time we do something in real estate, the first time is terrifying. The second time, it almost feels like you could teach a course, but it's getting that first time out of the way that a lot of people hesitate to do. Howdy, everybody. On these random midday live streams, since they're kind of new, let's see if we can play along together. Start getting questions ready that you would like answered in a live session, but don't want to wait all the way until Tuesday to have answered live. And then when you bring it up here on a Tuesday, on a random any day, one of the things I'm learning about being retired is I never really know what day it is. And I always kind of thought Michael Zuber was joking. With him, he's got a schedule, and he at least knows which millionaire is coming on what day of the week. But for me, really Tuesdays were the only day that had anything set in stone. Like I knew I was going to do my live streams 4 p.m. Pacific Tuesdays. So these randoms will be random. Howdy, Terrence from Mobile. So glad you found your channel. Thanks for giving you confidence. Dune Rider. Yes, Larry, I rode the dunes all last week. A little disappointed I didn't even come back with a bruise. Means I didn't play hard enough. So here's our first question from Ironwood Workman. Howdy. And howdy to everybody who's dropping in to say hello. I appreciate that. Every one of the comments helps. But Ironwood, Dion, would you use a 40-year loan if you could? I hear they are on the way. They are on the way. They're already here. They've been out for a while. Convoy Home Loans has one. We did a couple videos together. They have a 30-year fixed rate or a 40-year fixed rate, and the 40-year fixed rate is 10 years interest only. I would absolutely consider doing that. I would do a 1,000-year mortgage. My goal is never to have the property paid off. I actually don't care if it is. One of the challenges comes up once we have properties paid off and we're at the end of our depreciation schedule, we actually start to pay taxes. And we're so used to not paying taxes in real estate that we want to avoid that. Don't let the tax tail wag the dog and don't start making decisions based on the taxes. Benefit from the tax benefits that exist while you can. But if it's a challenge later, having a property paid off and having your depreciation schedule done, I don't look forward to that. But the length of the loan doesn't matter. I invest for cash flow. I want enough money coming in that I don't have to sell my life for 1 hour at a time that covers all of my expenses. And then a nice pad to where I sleep well at night, knowing I can handle a problem. So I looked at them. Consider the difference, though. With the 40-year loan, the interest rate was a bit higher. You could get it down to where the 30-year loan was, but you had to buy down the rate. So then do the math. Is it worth buying it down? How much of a difference is there in the payment? Always ask your lenders, is there an early prepayment penalty in case you decide to change your lending structure in the future? But yes, 40-year loan products are, I think, going to be one of the elements that keeps housing prices higher. First-time homebuyer programs coming out with less money down, qualifying people who might not be able to qualify. The way the Fed moves interest rates around, people say that interest rates going up will cause prices to come down. Well, people start looking at house hacking becomes more powerful, 40-year loans instead of 30-year loans, rents going up. Buying power might go down when interest rates go up, but the prices aren't coming down. Not the way everybody expected. We heard people saying there would be a 20% crash by the end of summer, and we're not seeing a crash anywhere. We are seeing 6% down month over month, but not year over year. Year over year, we're still up. So, Bruno, howdy. There's a small section of my market where the new 2023 HUD fair market rent will pay more than the market rate I am seeing now. Am I missing something, or can Section 8 not pay the rate they posted for a zip code? Section 8 doesn't pay the rent. You have a lease between you and the tenant technically pays all of the rent. Section 8 has a contract with you, not a lease, but a contract saying they will pay a certain percentage of that tenant's rent. They can go up to, and the Lumberjack Landlord has a website, which I should probably paste in, if I could find it quick enough, into the comments, where you can look up what the fair market rent for your area is based on basically your city, county, in your state, plus 10%. They have a 10% variance. So if you see the maximum, they can go above that. I've used the binder strategy on the Housing Authority. Their website said that they would pay $1,800. That was the most they would pay for the rental that I had. I showed them comps in the area for $2,300 and $2,400. I sent them emails of screenshots of the current rentals going for rent. I said I was only asking for $2,200, and they adjusted to $2,200. Now with the increase that's coming in 2023, I'm what they will pay. So I'm not above where they were. So it really depends on because most counties have a housing authority. So it seems like a government agency that runs the housing voucher program, but some counties have a nonprofit, and they're all unique. I invest in 2 counties, and I hate to call anybody out by name, so I probably shouldn't do that, but Pierce County sucks. Their housing authority is unresponsive. They don't work with owners. They need units, but they're just not very friendly to work with. Thurston County, I work with them all day long. I love them. Can't wait to have more units listed with them, because they can't go into you and say, hey, we're going to pay more than fair market rent. But if you do the work for them, show the comps, show the thing that their system might be missing, some counties might work with you. And that's been my experience with the one county. Thank you, cool name. Howdy, I appreciate that. Corby, howdy. When doing a 50-40-10 and getting a 3% seller credit, are you getting that 3% on the full amount, financed and owner financed? So 3% seller credit so all things are possible in negotiations. But that 3% seller credit is probably going to be on the total amount, because the seller on a 50-40-10 deal is walking away with 60% of the funds, right? They're getting 50% from the loan that you're taking out and 10% from your down payment, meaning they have 60%. So that 3% seller concession is probably going to come from the whole amount, but it could be negotiated out of just that 60 and not touch the 40 that the seller's carrying. Each deal would almost be unique on that. And that's the great thing about seller financing is you're educating the seller on how things work, and you get to kind of negotiate what matters to you. Sometimes all that matters to the seller is the price. So negotiate the terms. Sometimes it's a place to live. Sometimes it's a consistent payment. And as long as you find out what matters to the seller, it's a lot easier for you to pitch the deal. All-nighter, I agree. Everything is negotiable. Perfect. Michael Smith, howdy. Question. How much does local crime determine if you buy in an area? So I've not gone on to websites and looked up sheriff's reported data. I was a police officer until 2008, and at least at that point in time, it wasn't very accurate. So it could depend on your area on how much of it's reported. Cities, municipalities, and since I'm not in law enforcement anymore, I can say this without fear of losing a job, manipulate the numbers. Do they want funding for a bigger police department? All of a sudden, it looks like there's a bunch of crime. Do they want funding because the police department is doing a great job? Looks like crime goes down. It's all easy to manipulate. I would look at an area based on the perception of the people who know the areas. Either you live there or used to live there and know the neighborhoods, or your property manager does, or your handyman does, or somebody that you trust who also works in the industry does. Do you feel safe going there? Can you go there at 8 o'clock at night when it's dark in the winter and feel safe talking to a tenant? That to me is more important than actually reported crime, because what types of crime are reported? And this is just my opinion, but if you're in a place like California or New York or Chicago, where you have the strictest gun control laws, you have the most gun violence, but because you have unarmed victims. So you have carjackings, home invasions. If you live in a place like Washington, where you can get a concealed weapons permit by filling out a form, we have the same amount of crime. It's just not, instead of a carjacking, it's a vehicle prowl. Instead of a home invasion with people there, it's a burglary when they wait for you to leave. Like, we have the same amount of crimes. So to me, it really comes down to find out from law enforcement, where are the places you're not allowed to go alone? Like, that's the neighborhood you don't want to invest in. And most police officers will share that information. I know I would when people ever asked. I actually know the area in the town still where I was an officer, where you just don't go to. If you are in or around Tacoma, this is not where I was a police officer. I know that if any property is in any way associated with a street called McNeeley Avenue, that's the local war zone that you just avoid. But in 5 or 10 years, that might completely change. When I first moved to Washington in the 90s, there was a place in Tacoma called Hilltop, where they literally sent police officers for training, and the military had a helicopter that would fly around at night, because the Joint Base Lewis McChord is close. They would fly a helicopter around and shine a spotlight because it was so unsafe. Now it's kind of the higher end place to live. So you have to pay attention to the neighborhoods and what they're like now. So I haven't looked at the specific crime to make a decision, just the safety level of the area, which you really aren't going to get from a website. Rob, howdy. Save you from boredom sitting in the dump. That's terrible. My family runs residential tree services and logging companies, and we pretty much know everybody who works in the local dumps. Ironwood. John had a great question. To finance an ADU, would you use a home equity line of credit today, construction loan? Did I miss a question? I must have. If I did, I'm sorry. Okay, so great question. I'm not a fan of using home equity lines of credit because you don't get a 30-year fixed rate debt. Everybody always says, oh, well, HELOCs are fixed rate debt. Well, 10 years, 5 years, what is your lender giving you? And you're using equity on an existing asset. So you're either increasing your expenses for where you live or decreasing the cash flow on a rental. So you have to factor that added debt to an existing asset into your equation on, does the new asset produce enough income to justify both expenses and give you the yield that you're looking for? A construction loan, if you find a contractor that understands how they work and is willing to work with you and isn't busy enough to be able to get the job done on the timetable that you're looking for. As far as building an ADU, I will be very transparent. That ADU guy, it's a YouTube channel here in YouTube University. It has a lot more experience on ADUs. If you want to invest at a distance, I would send you to Millennial Mike. If you want big, huge portfolios like Zuber or Lumberjack Landlord, I would tell you to go to them. So I'm very specific on things I haven't done too. I have not done an ADU. I have not done a build. I would know that the first thing I would do is find out from municipality and probably through the contractors that work in the area, how that municipality is to work with. What is their permit timeline like? Are they wanting more ADUs? Are they trying to limit builds? Sometimes the city, like I have a triplex. Technically, it's a house with a duplex, but one of them is an ADU, so it's a triplex that's zoned for R4, so it can have residential 4 units. The city told me they would love me to put a 4th unit in there. All I have to do is get off my septic and connect to city sewer, which I don't want to do because I prefer septic over sewer all day long. So if I ever do an ADU there, the city will probably, seems like, work with me because they're wanting me to connect to city sewer, gets all 4 of my units on there, even though I'm just adding the 1. So find contractors in the area. I would not believe, and this is not saying that government officials are disingenuous, but I would not believe a word a person says that works in the city, because they have no idea what their city directive is going to be in 2 months when you finally get to your gopher studies done and your building plans are done, and they don't know what it's going to be like. So find out from a contractor who's worked in the area for years, possibly decades, on what it's like to build in that area before you commit your resources to it. ADUs are becoming more and more popular because we have kind of a federal mandate saying we want to remove all single family house restrictions so people can add ADUs to help fight the housing crisis. But that doesn't mean every municipality is going to play along. And as I see by our magic timer here, we are out of time for today's short live stream. Again, if you want enough time to get all of your questions answered, Tuesday, 4 p.m. Pacific, I do live streams here, and I'm going to start doing more random midday live streams so that people on their lunch break or stuck in a dump like Rob can entertain themselves. Thank you all very much. Last question before I hit the end here, why septic over sewer? And then I'm going to wrap up and not even see any more comments. So thank you all very much for coming today. I have septic systems on about half my properties, and I've had one issue that cost me about $300. I've had one that was pumped in 2017. It was built in 1991. The first time it was ever touched by anybody was 2017. Hasn't been touched since. Doesn't need any maintenance. Eventually, I'll probably have to replace or repair them. Yes. Or I pay my city $100 to $300 a month per unit for sewer connection forever. And whenever there's an issue in my pipes, I pay for that too, because it's probably going to be on my side of the connection. I've just had better luck with septic. So that's why I prefer septic over sewer. But we'll connect to sewer when I add a 4th unit on that one, because that's what the city wants. And play nice with your local municipalities, because you're going to be doing work there for years. Until my next midday random live stream, thanks for coming to my Dion Talk.